New economic data came out that is a bit concerning. Jerome Powell and the Federal Reserve recently came out and said that they were going to slow down rate hikes in December of 2022. But new reports just came out that have people questioning what is going on with inflation. Are things really under control? Are we in a lot more trouble than everyone is thinking and everyone had been saying over the last few months? In addition to this, there's a few things going on with Cardano and the overall crypto market that are very interesting, to say the least. Cardano has some great news in terms of development that we need to talk about. So when we're looking at the overall economy, what's going on with the Federal Reserve, Jerome Powell and the Federal Reserve recently said that smaller interest rate hikes could start in December. They'd previously had 75 basis point rate hikes for the last few consecutive meetings. But now, based on data they had previously seen, they said that we were going to start seeing them gradually slow things down just a bit. That things are looking a little bit better in terms of data, that it looks like inflation is under control. But then a brand new report just came out on the 1st of December 2022 that invalidates some things that he was saying and some things that the Federal Reserve were thinking. Because what we saw is that a new report came out from the Labor Department. And in this report, it talks about job growth in the U.S. And job growth, while it was so much better than people were expecting, this is not a good thing, because job growth came in at 263,000 jobs were added in the month of November versus only 200,000 that were expected. That shows us that the economy isn't slowing down as much as Jerome Powell and the Federal Reserve thought, and that everything they're doing to combat inflation isn't working exactly as planned, because they were expecting to see job growth slow drastically month over month, but we have not seen that happen at all. And in addition to this, in this report, we also saw something that is very key, and that is that average hourly earnings jumped 0.6% for the month. It puts us at a 5.1% year-over-year increase, and this is not in line at all with what the Federal Reserve wanted, was expecting, was anticipated. This was not in line at all with what they had hoped for. Originally, they had said that they have no problems with seeing strong wage growth, seeing job growth, but they said ultimately for wage growth to be sustainable, it needs to be consistent with 2% inflation. It can't be going 5-6% increase every single year. It needs to be around that 2%. And seeing that we had just in the month of November a 0.6% increase, this is way too high. So this report causes a bit of concern for investors that maybe what Jerome Powell and the Federal Reserve has been doing isn't working. I want to quickly interrupt today's video to bring you a word from our channel partner, FitBurn. FitBurn is the world's first burn-to-earn game that pays you to get fit. The way it works is you earn by simply moving, doing activity, burning calories. It doesn't matter what activity, you will earn money. The cool thing about this project is that it has already partnered with the biggest names in the fitness and wellness space. It is already supported and has partnered with Mr. Olympia, one of the largest bodybuilding contests in the world, and FIBO, which is the world's leading trade show for fitness, wellness, and health. Not only this, but has partnered with major crypto projects as well, such as Firechain and Swissborg. FitBurn has refined the move to earn concept entirely and turned it into a more complete project for athletes around the world, because it doesn't matter what activity you're doing. The project is in the private round and has already managed to raise over $5 million and received the award for Best Exercise to Earn Game of 2022 from the AIBC Summit. Right now, you can be a part of their private round and get early access only by using the link in the description. This isn't typically available for retail investors, but you can use the link in the description and check it out today. Right now, FitBurn's app is currently being developed, and I think it is potentially going to be the biggest app in the crypto space, because it combines blockchain gaming and the largest industry in the world, which is health and wellness. So use the link in the description if you want to be a part of this project and check out their investing pools for FitBurn today. In the crypto market, we're seeing some very interesting things happen. First of which is that we have seen that Bitcoin mining difficulty has been continuing to increase. It's at all-time record high of almost 37 trillion. But what we have seen with this is that while we're continuing to see Bitcoin difficulty increasing, the amount of Bitcoin mining revenue continues to fall faster and faster. And what we've seen is that Bitcoin mining revenue fell 20% in November. So this is an interesting combination. We're seeing Bitcoin mining revenue fall. We're seeing Bitcoin hash rate and Bitcoin mining difficulty increase. So basically, it's getting more and more difficult to mine Bitcoin, but Bitcoin miners are making less and less money. This causes a lot of competition in the market. It causes a lot of smaller players to be squeezed out of the market because if you're not at scale, now it's becoming more difficult, more expensive, and you're making less money. So it is becoming more and more difficult to mine Bitcoin. A lot of this has to do with the fact that Bitcoin is only at $16,000 to $17,000, $18,000 per coin. When Bitcoin is more expensive, they're able to generate more profits. But right now, with Bitcoin's price lower, it is a much tighter margin for Bitcoin miners than it was before. Moving on, let's talk a little bit about what's been going on with all of the FTX drama. So, Sam Bankman-Fried recently had an interview with NYT. He talked on this interview, and in it, he said that he never tried to commit fraud on anyone. I guess he just did it without even thinking. After that, he came out and said that he only has $100,000 left in his bank account after the FTX collapse. Yet, he's going about hiring a whole entire team of lawyers to handle his case. Where's that money coming from if he only has $100,000 in his bank account? Seems a little off. Third thing he said is in this interview that with this, he said that he said that FTX is fully solvent and withdrawals could be open today if they wanted to. Why didn't they just open up withdrawals a few weeks ago when everything happened if everything was still fully solvent? If FTX US is a different entity, why did they just stop withdrawing people's funds? Why did they halt everything? And now what we're seeing is that he's saying that he's still very sorry, but his memory isn't great. So this whole sequence of events just gets more and more interesting, to say the least. We're seeing Sam Bankman-Fried start off by saying he has no money. Then he's hiring a team of lawyers. Then he's basically saying that FTX US was solvent the whole time. Now he's saying he doesn't really remember what happened, why they went bankrupt. Things are just not adding up and don't look good at all for Sam Bankman-Fried. It looks like he's ultimately going to end up in jail, as many people believe he should, but things are just getting more and more interesting with this whole entire situation. So we'll continue talking about that on Twitter as well. Last thing I want to go over is what's been going on with Cardano, because there's a few very surprising statistics with Cardano. The first is that with Cardano, we just saw that it ranks first out of all developers. What we've seen with Cardano is that Cardano ranks first out of all blockchains in developer activity. ADA has received more than 570 significant developments on GitHub in the last 30 days, which is 18% more than its closest competitor of Polkadot. A lot of people didn't believe this statistic. A lot of people thought this was false, that I just posted this. It's not real. But when you look at the data from Sentiment, a blockchain analytics firm, you can see very clear that Cardano has seen a massive spike in developer activity relative to all the other blockchains. It is significantly ahead of Polkadot, Kusama, Cosmos, Ethereum, all the other blockchains in terms of developer activity. So while everything in the crypto space is still on edge, it's definitely by no means looking all exciting right now. What we are seeing is that solid projects are continuing to see solid development, are continuing to see developers working on these projects, building on these projects, and seeing strong growth when much of the market is failing, collapsing, projects going bankrupt. We are seeing the strongest projects continue to see record-breaking development. So that is something that we definitely like to see for Cardano. And other thing in terms of good news is that while many people are saying crypto is dead, Mike Novogratz and Galaxy Digital just announced an acquisition. They said they're going to buy some assets from bankrupt crypto lender Celsius, and they announced that they are going to be acquiring GK8, which is a self-custody platform that Celsius Network bought back in 2021 for $115 million. The details of this deal are not disclosed as of yet how much Galaxy Digital is going to be acquiring this asset for, but what we do know is that they are going to be acquiring it for a lot less than what Celsius paid, so a lot less than $115 million. And this is interesting because just about a year ago, Galaxy Digital was looking to acquire BitGo, which is another crypto custody company, and they were going to acquire BitGo for $1.2 billion. So Galaxy Digital, obviously they're doing well enough right now where they have money on the side that they can go ahead, scoop up some assets that they had previously wanted for a very, very discounted price. So everything is not all bad in the crypto space. Yes, there's a lot of uncertainty in the overall economy. Yes, there's uncertainty still with the FTX drama, but what we are seeing is the solid projects and solid companies in the crypto space are continuing to thrive despite what is going on.